What's happening, everybody? It's John here. I do videos on investing, on generating income online, on credit, and then also you're going to see some quite a bit of videos actually on adventure travel. So what are we doing? We got a video today here on a very simple video on investing. What's happening? It is 2:38, so we are an hour and 30 minutes after the market close here in California. I'm in California in Los Angeles, West Coast time zone. It is Thursday, April 29th, and Amazon, what happened? Amazon has released their earnings after the market closed today. So, in case you guys, maybe you've watched some of the videos on this channel, maybe you haven't, but basically, I do cover a lot of investing because it's been certainly a very opportune time to be doing some, not necessarily day trading, but some very, activist investing in your own portfolio. And I specialize in growth technology for a long time, but certainly since, let's say the, beginning of 2020, been a crazy, crazy bull run. But, what's happened is I have a pretty big exposure in my portfolios to Amazon because I put a lot of focus on them and really believed in that going back to 2014. And I'm looking to really reduce my exposure to Amazon. But I want to take you into CNBC talking about Amazon releasing their earnings and exactly what has happened with the Amazon earnings release. For me, what's funny is I want to tell you that basically I actually have had order limits. Limit orders rather, sorry, limit orders on my account on multiple brokerage accounts with respect to Amazon because of just my desire to reduce my exposure to Amazon. And basically what I did is I went in and I actually canceled those today, literally as I was seeing them, because what's happening is Amazon is popping. Their shares are popping more than I've seen them pop in a long time. Actually, they've been going up quite a bit here in April of 2021, but they are up, a little bit lower now, but they were up almost 4%, so over 3,600. So my limit orders, in case you don't know what a limit order is, so when you go and we're just talking stocks here. So if you go and you want to buy, if you want to buy a stock, you want to buy shares of a company, you go in and you can either purchase them on what is a market order, which means you just want to buy it, X amount of shares, that order is either executed or it isn't. Most likely it is on a market, and then you just get what the market is going to give you, right? There's also what's called limit orders. So the limit order is just say, okay, I want to sell Amazon at 3,600. So I've had limit orders in there for Amazon for in both of my accounts since literally mid-February, and I had them at 3,500 after the most recent earnings release. And they actually didn't get executed at 35. A couple of them, I think like one or two of them did get executed at like the 34 level, back in mid-February. But basically, or maybe it was late January or in early February. But in any case, yeah, I think it was early February of 2021. They did, but I went in and I had them at like 3,500. Then I increased them to 3,600. But Amazon has not even gotten anywhere close to that level since their most recent earnings release, which was, again, I think early February of 2021. And I went in and it's been sitting there for, what is it now, like 2.5 months. These limit orders have been sitting there, and I canceled them because I saw the stock and after hours go above 3,600. So I'm going to be watching it pretty closely tomorrow, and either doing at least a market order or then doing another limit order. Because obviously, when you're talking about a share price of 3,600 or higher, that I'm normally market orders make more sense for me because I'm a lot more interested in understanding what my exposure to that investment is, that stock is relative to my whole portfolio in a given account, and then basically what the percentage exposure is of that, and then always increasing it or reducing it, and I like to do those on a regular basis, certainly not a weekly basis or anything, but several times a month, and for me, it's more, I mean, it's kind of a combination of a financial and emotional decision, but I don't get caught up in the price. Now, if you're trading tons and tons and tons of money, and millions of dollars of trades, or, even, maybe six figures of trades, yeah, I do understand that you're going to be very active in limit orders, but I'm not really doing that super actively, and I'm not trading millions of dollars, just yet. So I do focus most of the time on market orders because, I'm making decisions according to what my percentage exposure is, how I feel about the investment, and how it's growing. And when I make a decision, and I go with it. And I don't want to mess around with limit orders. I want to do a market order, and I want to move forward, with my decision. So let's take a look at what's happening with Amazon in the after hours here, and see how they're doing, because they've been popping a lot more. Amazon really hasn't moved that much in like literally 6 months, it seems like, but they are popping today, almost up almost 4% in the after hours. Okay, let's take a look.
The New York Times and Tom Forte from D.A. Davidson. Very good afternoon to you both. Tom Forte, to you first. Sum it up for us. What's your take?
Yep. So for me, the most important data point was the expectation that sales in the June quarter are going to be better than expected. If you go back to the early days of the pandemic, recall that Amazon leaned into essentials. This had a negative impact on their sales. They weren't able to keep up with demand. Since then, they've added fulfillment centers. They've added headcount. They're much better prepared. I think that's going to position them for the June quarter, and that's why the June quarter revenue is going to be better than expected.
Yeah, so Ed, we were expecting very tough comps throughout the rest of the year, but we're seeing, whether it's Amazon or other big tech players, that they have seen structural shifts over the last year, not just temporary COVID shifts.
Right, and I think that should signal to the market, the marketplace, what's going on with, when we get out of pandemic or even in mid-pandemic, there is sort of a secular change. I think people are going to just continue to buy stuff on Amazon like they were during lockdown periods. Maybe not quite as much as in terms of volume as before, but it was sort of an introduction to, the service for a lot of people, and they found that they liked it, so that's going to continue. I was blown away by the advertising numbers. Well, that is now their fastest growing business. The other thing for me, and I counted this, Bezos mentions Prime Video 17 times in his letter. I think it's the most he's mentioned Prime Video, talking about all the sports rights they're getting, NFL, etc. I think just look out for more of that, I think, in the future. I think, there's going to be more investment in that space. 175 million people watching streaming video, which, again, was a surprising number. Netflix is at 207 million. So Amazon's very, very close behind.
His 10-year-old child, he calls it. Yeah, that is.
Yes, exactly right.
So, Tom, AWS. Where's the AWS versus Microsoft Azure battle going? Who's growing faster?
Well, so I still think. Yep, great question. I still see AWS as the market leader, and I think there's a potential in a rebounding economy that AWS outperforms in 2021. If you think about what Amazon did last year, they worked with customers in travel and leisure to help them scale back their AWS spend because of the pandemic. So in a reopening, I think there could be better than expected performance for cloud computing for Amazon this year, which would be great for profits for Amazon in 21.
And Ed, what about the outlook for advertising? I guess not a nascent business for them, but not as developed as some other parts, and clearly a very strong business for some of their rivals at the moment.
It is. It has been. And I think, I've done some channel checks with media buyers, and, they are now shifting more TV dollars strictly towards digital. You saw that with Google and Facebook in their earnings reports in terms of blowout advertising numbers. I also think Amazon will benefit from this shift towards away from third-party cookies, right? So if you're a marketer, basically, if you're selling product, and you're selling it on Amazon, their advertising business is really just sort of effectively these co-op fees, right? So on Amazon, they know they have first-party data, they know the customer, and that's really what that ad dollar means. And so I think they'll benefit even more with the disappearance of this tracking, with the disappearance of this sort of third-party data that after what Apple's doing to its iOS and even on web browsers as well.
Tom, Bezos is obviously handing over the reins at a strong time for the business. Where's the investor community on this? Are they sort of cool with this transition? And do you expect any talk about it on the call?
Sure. So I think if, picking Andy Jassy, the head of AWS, the most important business within Amazon, retail also important, but to me a sign that they're going to focus more on services in the future. Generally speaking, when I think services, I think higher margin that could enable it to maintain its multiple over time. So I think investors are more than comfortable with the transition.
Shepard Smith.
So there you go. There's that's some live live coverage, I guess, on Amazon and their earnings release right now. Here we are again. It's about an hour after the market close here in California, and I'm gonna put this up as soon as I can. And that's Amazon. So everybody, I'm Amazon's really exciting. You look at those numbers, you see over 100 billion for revenue in the quarter. I mean, my research, I've done some research on the biggest company in the world revenue-wise, and that's Walmart at over 500 billion. I think it's certainly more likely than not that Amazon will surpass Walmart, and quite possibly Amazon could become the first $1 trillion a year in revenue company ever. But the fact is at the end of the day, everybody, I'm an investor that's still I'm still trying to get my portfolio bigger and get to the point where I could just I feel comfortable just living my life from my portfolio, and I'm like nowhere near that particular place, even though I am a Gen Xer. But the thing with Amazon is, number one, I do have margin on my accounts, so the reality is that, well, not in my IRA but my other accounts. It's a little complicated, but it just takes up too much of my exposure, and I want to pave the way for other growth companies, like, for example, companies that are about to or have recently hit $1 billion in sales, and that and that have really high gross margins, and I would feel really good about. I mean, I love Airbnb, but even Airbnb is now a $100 billion valuation. It's pretty high. But I want to go after some smaller companies, like some that I like are Fiverr. I really like. They've had a 10x jump, like literally since this time last year, and then also Bumble, for example. Fiverr is under 10 billion in market cap, and then Bumble is at about 10 billion in market cap. But basically, I mean, the reality is the higher the market cap, the less the risk. The lower the market cap, the higher the risk, right? But that's how you really make it. I mean, at least in my view, that's what I'm doing. I've had a good run with Amazon. Once it hits 3,600, which it did in after hours, my the earliest of shares that I purchased, in 2014, will have about a 10x return, which is great. And it's time to pave the way for some more winners that are going to give me a bigger return, on that investment. Because already, right now after hours, I mean, the market cap of Amazon is 1.75 trillion. So they're going to get to 2 trillion. So what's going to happen? How do I 10x from 1.75, or let's say, how do you 10x from 2 trillion of Amazon? What is that going to be? 20 trillion? I mean, I don't know. I mean, that's a little, when is that even going to happen, that they would become a $20 trillion company? I just don't know if that's even ever likely, in my lifetime. And certainly it's not going to be, in any sort of a reasonable amount of time. So that's why I'm trying to pave the way for some growth companies where you can invest in them, at a lower market cap, so that you can ride that wave as they increase their sales from something like $1 billion all the way up to 10 billion and 20 billion and hopefully higher. So there you go, everybody. That is Amazon, and hopefully you enjoyed that. If you have any other questions about Amazon, I'd be happy to answer them. Everybody, again, like I said, I invested in Amazon back in 2014. Their share price dropped almost $100 in that day. That's not a big deal now because their share price is almost 3,600, but back then it was obviously a lot lower, and it was a very, very big percentage of their entire company that had dropped. So I went in, guns blazing, and certainly since 2014 have really increased my exposure and had, really probably too much exposure to Amazon, because Amazon hasn't done anything, their share price, at least in the last 6 months and up until recently. But that is the take on Amazon. But I'm happy to answer any questions about Amazon in terms of how I'm calculating with respect to my net equity, and then how the percentage exposure to my total price investments, and why I'm exiting Amazon. I'm happy to answer any of those questions. And also I'm going to put some links in here, everybody, in this video. Look, I've been investing since 1989. First job out of college was Merrill Lynch, then investment banking after that. I also worked for Sun America for 3 years here in Los Angeles. I'm not a financial advisor. All this is for entertainment and for education, but I'm also just on my own, a very good investor. I got a 33x return on my original Apple shares where I invested in June of 2007 before the first iPhone. I have an 80x return on my Netflix shares when I invested in them in 2011 and 2012, and then also provided that in regular market hours Amazon hits 3,600, I will then have a 10x return on my Amazon shares. So happy to share anything with you. Hit the like button, subscribe if you found some value in this, and then you'll see a link below. I have a blueprint. I cover investing, generating income online, and credit at the very end. I got a 15-page plus guide, all the groups that give you a free credit score, plus all the groups that give you a free FICO score. 90% of all lending decisions are still made according to FICO, so you got to go out there and you got to get your FICO. And my guide, everybody, it's only $7, and it's 63 pages plus of content. And the reality is, to go get your FICO, you usually got to pay for it, except for the Experian app. And a lot of these groups are going to charge you, $20 or more per month, and you can get my guide for only $7. So that's worth it right there, right? Okay, thanks a lot, and have a great week.